Hello, Jay King, Self-Made Millionaire, coming to you from MillionairePennyStocks.com. And today I want to show you briefly a trade that was made today. This was a paper trade that we made today. And if you go to HowTheMarketWorks.com, you can click on My Order History, and it shows you where I bet against this particular stock. It found a lot of resistance at 196, 195. Those were the key levels of resistance, and I covered at a lower price. Now, remember, when you're shorting stock and you're betting against stock, you're going to have a margin account, because the broker, basically, you're selling shares that you don't own. So you borrow shares from the broker and you cover at a lower price. In other words, you pay back the broker the money that you borrowed from him, and the difference in the spread is your return on your investment. It's your profit. So, for instance, this particular trade, I purchase this particular trade when I sell it, and when I cover at a lower price, when I pay the broker back, I have a 5-cent spread on $2,800, which is my return for $140, I believe, somewhere around there. But it was a small profit. But remember what I told you: in growing an account, you want to take small profits. Now, with this particular trade, we see right here that the daily range on this particular stock, if you look at the volatility or the daily range within this spread, there's not a large spread in stocks like this. Sprint is the same way. Sometimes you're going to have a 30 to 40 cents, maybe 25 to 30 cents volatile spread in Sprint. But ZNGA, when you look at the historical quotes, this stock has been in its highs in the twos. So sooner or later, it's probably going to merge back up to the twos when we see the highs. But what I noticed, though, is notice when it opens up. When it opens up, now this is a small spread right here. But I saw during some of the other patterns, it opens at 207, then it goes up about 8 cents. Right here we see it opens up at 209, but look, it drops all the way at 193, day lows. But then look at this, it goes all the way up to about 215. That's almost like a 12 cents spread. And so when you look at these different patterns, I want you to go over these patterns, look at where the stock opens. And right here we see about a 10-cent spread. It drops down. Look at the day low. It drops down to 232, and then it goes up to 242. Now look at this. I want to show you this. Notice January the 28th. Look at 243. It opens at 243, goes down to 240, but then we have another 9 cents volatile spread. So this particular stock, it doesn't have a huge volatile spread, but it has great volume. And usually when it has like that 8, 9, 10, 11 cent spread, and it faces resistance, it starts to gradually go back down. So today what I did was I noticed that this was a larger spread than normal. Look, it opened at 182, and the day low was 182, but look, it went all the way up to 196. So based on this technical analysis chart, I felt that it wasn't going to break 196, 195, because based on the technical analysis, usually this stock begins to decline after a 9, 10, 11, 10, 12 cent spread. Hope this will help you in this ZNGA, understanding the psychology behind this, because this was a trade that I didn't expect to make a lot of money on, but I just wanted to have a 5 to 10 cent spread on my trade. Now I want to show you spread. This is a stock that I trade about 35 to 50 times a year. Sometimes I trade it more than that, and I don't fall in love with the stock, but I continue to look at its patterns. Now we see here the volatile spread of the day's range, 266 between 280. So this is about a 22-cent spread. So once it meets key level of resistance, a key level of resistance for the stock is anywhere from 286 to 288. And so when we see that, you got to understand something. Look at the historical quotes. When you look at the historical quotes, look at the day lows. Look at all the day lows. We see that the day lows are in the mid twos and in the 280s, the 270s. So this particular stock, it looks like the highest level of resistance lately, I guess if you look at a daily chart, it's been between, would you say, 270 and 275 at an average? And so today I noticed it went all the way up to 288, but notice it was a 20-cent spread. Now look here, day low, about a 20-cent spread. Day low here, about a 20-cent spread. Day low, almost a 20-cent spread. So understand something. When I see a stock find resistance, and when it finds resistance, key levels of resistance just simply means it can't break past its price. I bet against this, and I short it at key levels of resistance, and I cover at a lower price. So this particular stock, I didn't necessarily trade this stock. I missed the trade on it. I was going to purchase about 10,000 shares, and I was going to short, about 10,000 shares on this particular stock and cover with a 20-cent spread. But I missed this trade. But I wanted to show you the pattern on some of these stocks. On some of these stocks, you're not going to get a 30 to 50-cent spread. But if you can get a 10 or a 15-cent spread, even an 8-cent spread, whether you buy it or you sell it, that's wonderful. Now, we've already purchased this stock a couple of weeks ago. We purchased this stock at $2.25, I believe. And if you look at January the 20th, notice that this was a great dip buy. If you look here, this is the best time to buy this stock because this is the wholesale price. And notice how many shares were purchased when this stock dropped to 218. So it was a great buy around 225. We bought 5,000 shares. We're still holding on to it. And we'll look probably this week to execute a trade and sell off our shares. The goal is to get maybe in the threes or the mid threes. If I can get it to go there, then we'll sell that particular stock. And I just appreciate you so much for watching this video lesson, and keep watching these lessons. As you watch them over and over again, everything starts to make sense. Have a great day.